1099 DA updates, what crypto traders and investors need to know. Before 2026. So what exactly is Form 1099 DA? How is it different from the 1099K or 1099B? And why should you care right now? Let's break it down. Form 1099 DA is the new standardized tax form for digital asset transactions. It's the IRS's way of saying no more guesswork. Starting in 2026, centralized exchanges will be required to issue this form to report crypto sales and dispositions, dates acquired and sold, cost basis and proceeds, gain or loss for each transaction. Sound familiar? That's because it mirrors the structure of Form 1099B, the traditional form, brokers use to report stocks and bonds. But this time it's crypto, and the goal is total transparency. How does it compare to 1099K and 1099B? Let's clear up the confusion. 1099K. This is a general purpose form for reporting third-party payments. Some exchanges have used it to report staking or reward payouts, but it doesn't include cost basis or gains. It's basically just a gross receipts form. 1099B. This is what you get from a traditional brokerage account. It shows every trade with acquisition date, sale date, cost basis, and gain, loss. 1099 DA. Think of it as the crypto version of the 1099B, with one big difference. It's tailored for digital assets. Expect it to become part of a composite 1099 package, much like traditional brokerages send. 1099 INT for interest, 1099 DIV for dividends, 1099B for trades, 1099 DA for digital assets. If your tax return doesn't match what the IRS receives from these 1099s, expect a CP 2000 letter in your mailbox, along with a proposed tax bill. Why this matters now, even though it starts in 2026. Sure, the 1099 DA won't be issued until 2026 for the 2025 tax year. But here's the catch. The data that shows up on that form is already being captured. If your records are sloppy, your cost basis is missing, or your internal transfers aren't tracked properly, the IRS might assume a gain where there wasn't one, and that could trigger a hefty tax bill. Once the 1099 DA becomes standard, the IRS will expect your return to match it exactly. Any mismatch? You'll get flagged. What you should be doing right now. Here's how crypto traders and investors can stay ahead of the 1099 DA rollout. 1. Start tracking your cost basis for every transaction. If you can't prove what you paid, the IRS may assume it was zero. That's a tax nightmare. 2. Archive your exchange and wallet histories annually. Don't wait for exchanges to go dark. Back up everything. CSV files, API exports, screenshots. 3. Clean up internal transfers. Transfers between your own wallets should be labeled and documented. Otherwise, the IRS might count them as sales. Don't rely on 1099 DA to tell your full story. These forms will help, but they won't capture every nuance, especially if you're trading across DEX, self-custody wallets, or obscure platforms. Do you need help before the IRS gets the full picture? At CryptoTaxAudit, we help crypto traders and investors get their records straight before the IRS comes asking. From fixing missing cost basis to reconciling exchange histories, we make sure your tax filings line up with what the IRS will see on your 1099 DA. And if the IRS sends you a letter, we don't just prep returns, we defend them. Don't wait for 2026 to clean up your crypto tax records. Get ahead of the 1099 DA shift now at CryptoTaxAudit.com. Want to reduce your crypto tax bill? Check out our article on FIFO, LIFO, HIFO. The link's in the description. And don't forget to subscribe for more crypto tax tips. Still have questions? Here are some of the most common ones we hear from clients. So what is this 1099 DA form? Anyway, it's the IRS's new form for crypto. Starting in 2026, exchanges will be required to report your digital asset sales, showing when you bought and sold, your cost basis, your proceeds, and whether you made a gain or loss. Basically, no more guesswork. The IRS will see everything. Next one we get all the time. How is this different from a 1099-K or a 1099-B? Good question. The 1099-K is just a gross receipts form. It shows total payments, but no cost basis or gains. The 1099-B is what stockbrokers use, and it gives the full trade details. The 1099-DA is like a crypto version of that, tailored for digital assets, with detailed trade data the IRS will use to match your return. Another big one. Why should I care now if it doesn't start until 2026? Because the data that'll show up on that form is already being tracked. If your records are off or your cost basis is missing, the IRS might assume you made a profit even if you didn't. That's how people get hit with audit letters or surprise tax bills. All right, so what should you be doing now to stay ahead of this? First, track your cost basis for every trade. If you can't prove what you paid, the IRS can assume it was zero. Second, archive your exchange and wallet history every year. Don't rely on platforms to hold that data. And third, clean up internal transfers. Label them so they don't get misread as taxable sales. Remember, the 1099-DA helps, but it won't tell your full story, especially if you're using DEX or self-custody. And the last one, can CryptoTaxAudit help if I'm already behind? Absolutely. We're one of the only full-service crypto tax firms that specializes in amending past returns, calculating missing gains, and preparing you for IRS scrutiny. We don't just clean up messy records. We make sure your filings are accurate, defensible, and match what the IRS will see on your 1099-DA. And if you ever get audited, we don't walk away. We defend your return. So whether you need to fix past years, calculate missing gains, or get fully audit-proof before 2026, head to CryptoTaxAudit.com. We'll help you take control before the IRS does it for you.